Move to Earn looks to merge play to earn and fitness to encourage healthy living. Today we'll be analysing one of the most popular Move to Earn platforms. What is STEPN? STEPN is an application based on proof of move that runs on the Solana blockchain and uses a GPS system to encourage users to do exercise. It is based on the purchase of NFTs through which rewards are obtained by walking or running, but not in the virtual world, but rather in the physical world. Before jumping into the news stories that have influenced the movement of the STEPN token, let's carry out a technical analysis. In the weekly time frame, we can see that it is quite a new token. In fact, the IDO took place in March this year. From the moment it was listed, it has experienced explosive growth. This movement represents an increase of 28,000% until reaching its all-time high. Several factors have caused this, such as the capital input of the listing in various exchanges, in addition to the FOMO that we'll be discussing later on. Following the significant rise, we can immediately see the 81% reversal between April 25th and May 23rd, forming 5 weekly correction candlesticks. If we zoom in, we can see that while the market dropped, the price of STEPN continued to increase until May. Let's not forget that Bitcoin started dropping in November when it experienced its all-time high. The week starting May 9th, we can see a fully fledged volatile movement and the price moved from 1.6 to 0.85. The candlestick created a huge spike, which is a sign of liquidity in the 0.85 area. Soon after, we can see a candlestick between May 16th and 22nd with less volume, although similar to the following candlesticks, it created a spike in the inferior zone. The week starting May 23rd, we can also observe a pretty volatile movement where the price almost loses the dollar support at $1.08. In fact, in one moment it does, before bouncing back to absorb the price in the $0.85 zone approximately. From May 30th to June 5th, we can see a type of inverted hammer candlestick leaving a spike in the superior part, which in a high time frame could mean a movement reversal. Now, the price is covering that liquidity gap produced in the week of March 28th between $0.75 and $2.2. In the daily time frame, we can clearly see the movement that marked those higher highs and lows until reaching its all-time high on April 29th. But from that moment on, we can see a structural change where we start seeing lower highs and lows. We must take a look at the candlestick on May 9th, which is the moment in which an important volume input started to approach the average, even losing the $2.1 zone, a previous support zone. That bearish engulfing candlestick on May 9th covered all candlesticks between April 1st and 17th. From the fall on May 9th, a type of symmetrical triangle forms, and due to some fundamental developments which we'll be covering shortly, once again a 38% reversal is carried out on May 26th. Additionally, that candlestick surpasses the zone of lows at $1.13. In this chart, we can get a better idea of the downtrend that the price has been forming over the last few weeks, marking a parallel descending channel since it broke the support mentioned earlier. On May 26th and 27th, we can see an important rebound zone from $0.82 to $1.29, looking for the previous support and the new resistance. But after testing the higher part of the channel, another reversal took place, losing that important support zone at $1.13 approximately and heading towards the $0.89 support. Now we can see a lateralization phase, which as of now we're unable to determine whether it will continue its bearish movement or whether we're about to face an accumulation phase. To see a bearish movement, we'd have to see candlesticks closing below the support level at $0.85 with an increase in the volume input. On the other hand, if we start seeing candlesticks closing above the resistance that converges with the higher parts of the parallel channel and surpasses $1.3, it could head towards the next resistance located at $1.7. From April 1st to 27th, we saw a clear RSI divergence in regards to the price. A bearish divergence which, when losing the important zone of lows at $2.1, confirmed the divergence and an explosive bearish movement was carried out, which was confirmed with a wave trend. Another thing to keep in mind is that from May 12th until May 26th, signs of a bullish divergence were displayed. On May 12th, an oversold zone formed, and on May 26th as well, but wasn't quite as relevant. Let's not forget that if the RSI loses the 30-point zone, said divergence would be cancelled. But at the same time, it could mark a new divergence around May 12th in the event that it does not lose the RSI's 27 points. But we're not talking about Steppen's significant increase, but rather the correction movement carried out over the last few weeks. On CoinMarketCap, we can see the 17% drop over the last 7 days, ranking 4th amongst the cryptocurrencies that have dropped the most. And to get a better understanding of Steppen's abrupt movement, let's take a look at news stories that might have impacted the project negatively. The application has announced that it will stop providing services in China for regulatory reasons. The regulations of the Asian country require that the sending of cross-border data first go through the data protection regulator. And despite the fact that, according to one of its founders, this only affects 5% of the community, the news seems to have had a very important impact on the price of the GMT token. But the bad news around Steppen doesn't stop there. The application recently halted its activity as a consequence of a DDoS attack, a cyber attack in which fraudsters overcharged the chain to interrupt its operation. In this case, the attacks managed to overcharge servers and obliged Steppen to halt them over 12 hours. In addition to this news, we must consider something very important when analysing a project: tokenomics. In Steppen's case, the current supply in circulation is over 600 million, while the maximum is 6 billion. In other words, at the moment there's only 10% in circulation. The market cap is $570 million, and the trading volume yesterday has been at around $450 million. If the market cap drops in regards to the tokens in circulation, the price tends to decline. And watch out, although it could increase the trading volume, it doesn't have to necessarily increase the market cap, which is what determines the token's value. In fact, even if the market cap increases but the inflation percentage was higher than said increase, the price would also drop. But why is all of this important? Towards the end of this year, as we can see in this image, issuing will have continued and therefore inflation would increase by 5%. If the token's demand is maintained and supply increases, even if the market cap and trading volume remain, the price would still drop. But let's also take a look at how all of Steppen's tokens work. On one hand, GST is the platform's utility token with a limited supply, and GMT is the governance token with a supply of 6 billion as mentioned. On Steppen's app, these tokens can be purchased and acquired through movement. In other words, walking, which helps obtain both tokens GMT and GST. In addition, shoes can be rented, enabling the acquisition of GST tokens. All of these tokens can later be exchanged for USDC amongst others. The Steppen platform uses a token burning system, both for its utility and governance tokens. This system anticipates various ways to burn tokens, for example, when repairing shoes or leveling up, as well as to create or customize them. One of the burning processes of Steppen shoes resembles what, in the play-to-earn world, is known as breeding, which is used, for example, in Axie Infinity. It consists of merging NFTs to produce or mine a new one. Let's not forget that the entire GameFi ecosystem is made up of play-to-earn games. Most of them, with the exception of the most popular ones, have seen their tokens plummet or even disappear. Why has this occurred? Due to their unsustainable financial models. We're talking about masses of investors that dropped out for which demand failed to beat supply. In addition, lack of incentives and faulty burning systems have caused this. Moreover, there have been cases of excessive rewards after the launch of a platform and little incentive for sustainable reinvestment. This type of error has been tried to be solved with the oracles to find a financial balance, offering rewards to users based on the value of the token. And in this marketplace, we can see that STEPN has 24,000 items in Solana art, meaning minted non-fungible tokens. But the floor price, as we can see here, has dropped and sits at around 10.2 Solanas. And here we can see something very important. Since the beginning of April, we saw an increase in the number of holders as we approached the end of April. That number slowly started to drop. As new entities made their way into the market due to FOMO, capital was injected and trading volume increased precisely at its all-time high, a moment in which the rest of the market was reversing back. In short, this type of platform tends to lead to a general FOMO feeling, while knowledge around this technology as well as tokenomics tends to be quite poor. What do you think? Will Move to Earn's economic model be sustainable? Will STEPN be a sustainable project in the long term, or is it destined to experience the same kind of failure as other play-to-earn projects?